So time in the market is more important than timing the market. Charles Schwab, a US brokerage, did a hypothetical study of 5 different investing strategies. They created 5 fictitious characters, okay, and gave each of them $2,000 a year for 20 years invested into the S&P 500. The S&P 500 is a basket of stocks of the top 500 companies in US, okay? So for this study, this is the only investment that these 5 guys did. First one, Peter Perfect. As the name implies, he's perfect in the market timing. So every year, he's buying at the lowest point of the S&P 500 for that year. Okay? Perfect timing. Second one, Ashley Action. Ashley Action is an eager beaver. When she gets her money at the beginning of the year, she immediately puts it into the S&P 500 on the first trading day of the year. Then we have Matthew Monthly. Matthew Monthly is a very conscientious guy. He took his $2,000, break it into 12 equal parts, and slowly invested each part month by month on the first trading day of the month. Then we have Rosie Rotten. Okay, very bad timing, very unlucky lady. What she did is every year she happens to invest into the most expensive price or trading day of the S&P 500. So bad luck, Rosie. And then of course we have a Larry Linger, someone who thinks that, oh, tomorrow will be the right time to enter the market. And for 20 years, he never went into the market. So how did these 5 guys actually perform? Let's take a look. So Peter Perfect, obviously, the first bar, he did the best, okay? He had 138,000 or so in the portfolio after 20 years. This is starting out from 40,000 for each of them, okay? And then you will notice that Ashley and Matthew actually have quite comparable results. They did quite similarly. So whether you invest every year consistently or you invest monthly consistently over 20 years, your results are more or less the same, okay? And Rosie Rotten, you think she will have done quite badly, right? She is not far behind. Yep, a little bit worse than the other 3, but not that far behind. So who is left behind? Only Larry Linger, who never got started. All his money was just sitting in the bank account, waiting for the right time to enter the markets. Okay? So what is the message here? Doing something is better than not doing anything. Okay? And from my private banking days, I met many wealthy people. So guess which profile are they? Peter Perfect, Rosie Rotten doesn't exist. There are no such people that can time the market exactly, okay? Most of my clients were the Ashley Action or the Matthew Consistent. When they have extra cash, they look for opportunities to put into the market. So that is something we can learn from them. So if you have this story, write it down, and this is how you can change your story. As long as I invest consistently into the markets, I will be better off than not doing anything.